From the morning reading, QQQ, Diamond, Spider, IWM, short-term new high close. XLP, all-time high. XLK, bull market high. 8 of 9 sectors moved higher on Wednesday. XLP, XLY, and XLK were the strongest sectors, while XLU was the weakest sector. Oil futures fell 19 cents to close at 38.30. Breadth weakened as advancers led decliners 1.7 to 1 on the New York Stock Exchange and 1.46 to 1 on the NASDAQ. Today, the Qs, Diamond, Spider, and IWM each made a new short-term new high close since the February 11th lows. Consumer staples XLP made a new all-time closing high. XLU closed just below Tuesday's all-time closing high, and technology XLK made a new 15-year high. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:05 a.m. Central Time, and I'm recording this in preparation for the market day of March the 31st, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And at the time of this cut, things were pretty marginally right around scratch. So the S&P futures were less than 1 point off of yesterday's close. The Russell futures were down about 0.25%. NASDAQ is right at scratch, as is the Dow. Crude oil also right at scratch. Euro up about 0.4%. Bonds up about 0.25%, and gold up about 0.75%. Overseas action also, for the most part, pretty quiet. China up just above scratch. Hong Kong down just below scratch. Japan down about 0.75%, as is Germany, and the United Kingdom is down about 0.2%. In terms of macroeconomic reports for today, there's a huge schedule in the international, but in the United States, we have the weekly unemployment claims, and then Chicago PMI, nat gas storage. After the market closes, you have FOMC member Dudley speaking. Had to crunch it up, so it's very hard to read here, but in order to get Friday and be able to look ahead, what do we have here? We have non-farm employment change. So this is the monthly report, first Friday of each month. This is one of the big 4 reports and is likely to be a very significant mover on the day. Unemployment rate, all those various numbers that come in together. Also ISM manufacturing PMI and University of Michigan consumer sentiment all come in tomorrow. Then later in the afternoon, you have FOMC member Mester speaking. So just be aware of that in the upcoming. In terms of current market conditions, look at the short-term VIX down below 12 now, 11.87. Skew has fallen a little bit, just above the warning threshold. IV percentile on all the indices, very, very low. S&P at 11, Russell 15, NASDAQ 12, Dow 5. No standard deviation moves were put in yesterday on a close-to-close basis, and we still are very, very quiet with only 1 standard deviation move put in the last 2-week period. In terms of the charts, in the S&P, pretty interesting pattern here. You had a breakaway gap, and it faded from the highs of that move, but still closed up on the day. So pretty interesting pattern here. You could say that this could set up for a reversal pattern, but we'll have to see what the follow through is. These kinds of patterns need confirmation. Right now, with the markets being essentially flat, and I'm looking right now, they're still essentially flat as of this moment. We don't really have confirmation one way or another. So just be looking for that pattern as it fills out this morning, and what does it do. In terms of the Dow very similar to the S&P. NASDAQ, it had a bit of a doji after the gap. So very much mark of indecision, though, a higher close. And then the Russell, also a doji. Notice here I put this trend line in. So this is going to be an important area. We've got the next swing high is a little higher, but I think, frankly, that you're going to see this long-term trend line probably come into play as resistance prior to this area here around the 1162 on the Russell. In terms of volatility, of course, volatility has been coming down, and it continues to slowly but surely work its way down. It's almost on a channel here now in recent weeks. And bonds, not doing anything in particular, and bonds are in the middle of the cloud, so they certainly are not trending at the moment. And indeed, that's kind of the thing about all the market. It's while we've been in this big, strong move in the last several weeks, that is a very, very strong trend. Most of the action of recent days has been, more of a sideways pattern, but we've had this kind of potential to break out of that sideways pattern and move up. We're waiting to see if we can get some follow through on that. It certainly is setting up for that, but not yet really clearing the area, as it were. So just kind of keep all that in mind. In terms of the regular daily report, we continue to be very, very much an improved conditions. The intermediate term phase opinion still phase 4, price patterns near horizontal resistance, looking for combinations of those kinds of patterns along with some bull flags. In terms of the market timing signals, no changes from yesterday. IBD signal still confirmed uptrend. GMI index still a full 6 out of 6. Stock charts decision points still the same as yesterday. So our consensus of the market timing signals are bullish, with the long-term implications still kind of hovering over us, and that they are still in bear market conditions. So short to intermediate term is bullish, but the long term is still negative. So got to take that in the mix. Position sizing opinion did not change from yesterday. Both systems are at 100%. Intermediate term market postures across all 4 indices very, very strongly bullish, with the weak bullish sentiment line supporting them. Our strength of trend is weak but significantly improving. Hedge warning status is 0+, normal with some elevated risk conditions. And let's go ahead and drop down to those. We still have that volatility ratio warning that's firing repeated days. The skew still just barely, it's actually above 125, about a 9% probability. So still a little bit higher. Notice that the distribution day count on the NASDAQ dropped 1, so out of the warning status. So that warning went away. But perhaps most significantly on this intermarket risk aversion indicators, we still have all 5 of those ratios flagging as risk off at this point. Also note that the sentiment indicators are showing some elevated risk conditions, with the stocks at short and medium term at elevated conditions, and bonds also at an elevated condition. In terms of individual ETFs, the LQD has been joined now by Mexico as a very high sentiment, so watch for potential reversal patterns if you're in that market. In terms of the special opinions, no changes from yesterday, so pretty quiet change from yesterday to today all the way through this report. There are acceptable conditions to initiate new positions for option income strategies, cover call strategies, and put selling. Well, we are maintaining some defensiveness in the construction of these positions, and you note the in the money and out of the money ratio, 2 in the money for every 3 out of the money strikes. Spread those strikes around. Construct your covered calls with a bit of a defensive posture in case we should see that long-term market posture starts to become the dominant. Also, with respect to high beta, low beta, we've been mostly lower beta. Now we've been mixing in more high beta, and we also have a 2 to 3 ratio there as well. In terms of other sentiment indicators, I'll mention the Fear and Greed Index, which is the mix of 7 different indicators coming in at a 71, so fairly high, but not as high as it's been, in some recent days. We were up over the 75 area briefly. In terms of sector specific, we have a huge range of intermediate term market postures being put in by not just high beta, but low beta. So this is a big, long list at this point, certainly giving credence that the market is much, much healthier than it was when that list was very short and mostly defensive oriented. In terms of other sector specific information, our sectors, short, intermediate, and long, are all pretty much lining up as a sea of green, with the exception of energy. Energy still the holdout and holding under those neutral settings. Percent change you see yesterday was generally pretty positive. Only utilities really anything separating from scratch, even on the negative side, and it was down pretty marginally at about 0.2%. Mostly what you would probably read from this is that money was coming out of utilities and going into higher beta, less defensive areas, which is actually a good thing for the bulls and a healthy bull market. So I think that's probably it for today. Let's see here. Let's go on and start wrapping up. Let's see here. Let's talk a little bit about these daily price guides for a moment. If you've never taken a look at this and you're any kind of short-term trader at all, you may want to take a few minutes and go to this link right here. There is a video available there. It'll walk you through the guide. There's a lot of information packed into this guide, and perhaps not something that can be assimilated in a quick glance. Bottom line, there are all the classic day trader support and resistance levels all lined up for each of the key markets. For example, this little excerpt here is from the indices. So you have the S&P, the Russell, the NASDAQ, and the Dow all side by side. And I line them all up based on yesterday's close so that you could see where their performance is, one versus another in relative performance. And then also, there's got market profile, value profile, trader pivots, all the classic support and resistance levels. Very, very helpful. I can't imagine myself trading without this tool to be able to pick and choose my entries and exits according to where we're coming into the intraday support and resistance levels. So very neat tool there, and frankly, very inexpensive. It's only $25 a month to be able to get a package of 4 key markets. And you see, in addition to the indices, you have bonds, euro, gold, and crude oil on the futures market package. And then also you can get a package of 8 stock market for those that are trading in the Apple, Google, Amazon, Netflix, and then the index versions of the indices as well. So that is there. And then I'll just scroll through the rest of this. If you see something you need more time with, just hit the pause button and you can go to the hyperlink for additional information. Disclaimers as always, and hit the pause button if you need more time to review the disclaimers. And as always, we note the full set of disclosures can be found at this hyperlink here. So fairly short session today. We didn't have a lot of change from yesterday, and we'll go ahead and respect that. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading.